With all this inflation and the government tapering spending on top of all-time highs in the stock market week after week after week, people are starting to get a little nervous. Is it time to worry? Is it time for a bear market? Is the bull market going to continue? Stay tuned. What's up, fruitful investors? Hope you're having a great day. So my investing philosophy has always been boring, boring, boring. That's what I did as a real estate investor. I built my entire real estate empire for the past 12 years of just being boring, meaning that I bought single family properties, which is the easiest type of rental property to have, has the highest quality tenants, just pure boring. Yes, the growth is kind of slower. Yes, it's not nearly as much cash flow as my friends investing in multifamily or student rentals or Airbnbs or whatever, but it was consistent, it was predictable, and it was pretty much guaranteed. So my stock market and my crypto, yes, my crypto investing strategy has been kind of the same philosophy of boring, pretty much guaranteed. And one of my favorite sayings is, I want to get rich for sure, not maybe. So let's say there is a huge stock market crash. If you look at ETFs like SPY and QQQ, they always bounce over the long term. So in September from 2000 to 2003, we saw the market fall by 50%. SPY was at a high of 152 and fell all the way to $70 in the crash of 03, and it took all the way until 2007 to recover at 156. And once again in 2008, as you all know, there was a big bear market where SPY fell from 125 to $67 before reversing, and it took about until April 2013 for prices to get back at the same point. A more recent example was February 2020. We all know the COVID crash where SPY fell from 340 to about 220 in just a matter of days. Now, a lot of people say that that wasn't a real stock market crash because it only took about 6 months for prices to return, but we're gonna include it anyways. In my opinion, that was a pretty bad crash. Now, although nothing in investing is guaranteed, I like to invest in ETFs because they're made of profitable companies that over the long term, they literally have to go up. It's just the way the ETFs are designed. For example, if a company is not producing good earnings reports quarter after quarter after quarter, and they're just not doing well, they're gonna get kicked off the ETF and another better company will replace it. So ETFs like SPY and QQQ and IWM and DIA, they're all literally made to go up over time. So if you just don't freak out, don't sell, they will go up over time. So what am I doing for my stock investing strategy? I'm just patient as possible, which is really hard, but I'm nibbling long shares when prices of these ETFs get to the point of the 50 SMA. That's kind of where it's my signal to buy in. So which SPY is about probably 3 to 5% drop, which that's crazy in SPY land, right? We have Tesla and all these other Zoom companies and more tech companies that fall 10, 15, 20% all the time, and it's kind of just business, or crypto where it falls 30, 40, 50% all the time. But in ETFs like SPY and QQQ, a 3, 5, 6% drop is massive. The whole world's freaking out pretty much at that point. And that's kind of where it hits the 50 SMA. And that's kind of my trigger where I'll nibble some long shares. If it bounces really high for a good number of days, I'll probably nibble some more. But I want to try and avoid it keep going down and keep crashing, because the worst thing you can do is keep nibbling and keep buying as it's coming down and you're trying to catch a falling knife kind of thing. That's what I try and avoid. It's happened a few times, not gonna lie, but I'm trying to be as patient as possible and wait for a decent pullback in the ETFs, and then I'm buying long shares. For my more active cash flow strategy, I'm doing put spreads specifically on SPY and QQQ. So I'm going about 15, 16, 17% out the money. Now, if you don't know what I'm talking about, put spreads, out the money, you're confused right now, I have a number of videos on my channel about how to sell put spreads. This is my bread and butter. This is where the majority of my money in the stock market is allocated to these kind of strategies. I would say about 30% of my money in stocks is for long holds. The other 70% or so is dedicated to purely put credit spreads only on SPY and QQQ. Because I'm making a lot of cash flow, it's guaranteed, it's safe. I think it's the safest kind of strategy you can do with put spreads, which is a little more of a risky strategy, but the way I do it, going so far out the money in only 30, 60 days, is awesome. It's working out super well for me and a lot of other people that I follow. Again, if you have no idea what I'm talking about, check out the videos on my channel where I explain this strategy in great detail, but that's kind of what I'm doing with my long strategy and my short strategy with the active income side. But the most important thing is having a long-term view when it comes to stock market, because it is so weird and volatile and sometimes doesn't make any sense. Even though companies are doing really well, their earnings reports are killing, but there's something else going on in the news where it's scaring people, the stock market still falls. It doesn't make any sense. So you need to have a long-term approach and a long-term outlook on the stock market. If you're just trying to get rich quick and you only have like a 6-month or 2-month, kind of strategies going on, you're setting yourself up for more failure, especially with the long positions, especially. So I have like a 5-year outlook with SPY and QQQ when I'm buying long shares. So I'm putting that money to work, expecting to not even look at it or touch it for the next 3 to 5 years, minimum. So do I really care what's going on with Corona or the Fed not being able to pay their bills in the short term or whatever? It's troublesome. It kind of freaks you out in the current times, but long term, they're gonna figure this stuff out. The market always figures itself out. If you look at the graph of SPY going back to 93 to now, it had its dips and valleys for sure. But if you would have bought in 93 and just never looked at it ever again, you would be very rich in 2021. Even with all the world wars and stuff going on and the financial crash in 2008, the .com bubble, all these things, people thought the sky was falling, the world is over, Y2K is never gonna come back again. It always comes back. And funny enough, it's usually about 6 months to a year maximum, pretty much, where the market kind of figures itself out. If you would have bought kind of in the dips, maybe you bought too early, but you still bought some of the dip, it's like 6 months to a year on average before you're kind of at the same point again. So who cares? Just buy kinda at the right times and hold for the long term. If you're doing these ETFs like I am, super boring, super easy, and very predictable. Yes, the gains are a little lower. Obviously, if you invest in Tesla at the right time and it pops, you can make a lot of money in 6 months. It's gonna take 3, 4, 5 years to make that same amount of money, probably in SPY. However, it's pretty much guaranteed. So I hope you enjoyed this video. Hope you learned something. If you did, smash that like button. Also hit that subscribe button so we can see more of each other. I'll see you in the next video.